Gold and Bitcoin are on a bullish run as the Israel-Palestine conflict and other global uncertainties send investors flocking to buy safe haven assets. The recent rally also comes as traders are convinced that the US Federal Reserve will start cutting interest rates sooner than expected. On Monday, gold surged 3% to hit an all-time high of $2,135 per ounce before giving up some of those gains. Prices have now risen for 2 consecutive months, with the Israel-Palestine conflict boosting demand for the precious metal. That's taking the total gains to more than 15% since the beginning of this year. Analysts say prices could go up even more in the coming months amid rising bets that the Fed has finished its interest hiking cycle and it will begin easing policy as early as the first quarter of 2024. Meanwhile, declining long-term US yields could also prompt more investors to ditch bonds in favor of the safe haven asset. Another asset considered a store of value by some, albeit less reliable, has also shot up recently: Bitcoin. It briefly hit $44,000 on Tuesday as the fear of missing out continues to drive market frenzy. The price of the world's most popular cryptocurrency is now up around 150% year to date, surpassing its price in May 2022, when tokens plunged into a bear market after the collapse of Terra stablecoin. The rally was also boosted by optimism that the crypto market has left the toughest regulatory punishments behind. For more on this now, Robert Minter is joining us from Philadelphia. He's the Director of Investment Strategy on the ETF team at ABRDN. Thank you very much for joining us today. Right, what have the key driving forces been behind this strong Bitcoin rally? Is this general risk on sentiment on the markets or also something more idiosyncratic to the sector?
It's a bit of the latter. There are a number of ETF sponsors who have filed to launch Bitcoin or other cryptocurrency ETFs in the US. And if the US regulators were to allow a Bitcoin or other cryptocurrency ETF to go forward, it would be an implicit approval of Bitcoin for trading. So it's more the validation of Bitcoin, of regulators allowing Bitcoin to exist, that's behind a bit of the rally, in addition to the interest rate outlook.
Interesting. So something idiosyncratic rather than general risk on sentiment. And it's interesting because at the same time, gold has spiked this week as well. And although it paired some gains, it really remains at elevated levels. Why do you think a traditional safe asset like gold is actually benefiting from this very positive risk sentiment?
Really interesting story on gold. So ETF investors have sold more than 20 million ounces of gold in the last 2 years. And that's because real interest rates have risen. More than counteracting that, though, central banks around the world, particularly in the BRICS countries, have been buying gold at unheard of levels. Last year, over 1,000 tons of gold were bought by central banks. This year, through the end of September, more than 800 tons of gold. It's a tremendous amount of gold. And so if individual investors were to stop selling gold, where will central bank purchases come from? And that's where we're seeing some of the liftoff in price in the very recent past over the last month or so.
Interesting point and a curiosity, really. These assets, cryptocurrencies especially, are often described as inflation hedges, right? I remember that was the argument as to why investors had to buy cryptocurrencies during the pandemic, just to be ready for the post-pandemic environment. However, they seem to perform well now that inflation is receding. Why is that the case?
So, true. And really, Bitcoin, if you look at what it is more closely correlated to, it acts like a very small cap technology stock. It is not a risk off asset in any shape or form. Wall Street loves it, has tremendous bid ask spreads. So every time a Wall Street trading desk trades a share of Bitcoin, they get unusually high profits. It's also very, very volatile. So people trade it a lot. So trade a lot, make a lot on each time you trade it, and Wall Street trading desks love it. But gold, on the other hand, Well, we looked at the last three times that the Federal Reserve stopped hiking interest rates, and that was in 2000, 2006, and 2018. And gold went on to rise. Gold prices went on to rise 55%, 235%, and 70% in each of those respective time periods. So it really is, we like to tell investors what's happened last time. There are extenuating factors last time. However, it's something we really should pay attention to.